Look at me. Look at where you are right now in your life. You are either standing on the edge of retirement, looking out at the next 20, 30, or 40 years, or you are already in it. And you are asking yourself the question that keeps millions of people awake at 2 o'clock in the morning, staring at the ceiling, paralyzed with fear. Am I going to be okay? Or am I going to run out of money and become a financial burden to my children? Let me tell you something. There is a massive divide in this country between the retirees who are living a life of absolute freedom, comfort, and peace of mind, and the ones who are struggling, penny-pinching, and constantly living in fear of the next economic downturn, the next inflation spike, or the next medical bill. Do you think the difference between them is that the comfortable ones got lucky in the stock market? Do you think they all inherited millions of dollars? No, they did not. It has nothing to do with luck. It has everything to do with one single, non-negotiable habit. One habit that separates the secure from the struggling. And that habit is this: comfortable retirees have the habit of prioritizing liquidity and emotional security over maximum investment returns, while struggling retirees are still playing a young person's game, chasing yield, and leaving themselves completely exposed to the unexpected. Comfortable retirees do not view their wealth by just a number on a page. They view wealth by how fewer what-ifs they have to worry about every single day. That is the fear. That is the reality for 40% of retired households in America right now who do not have enough stashed away to cover even one single year of unplanned expenses. They are one bad market week or one medical emergency away from financial disaster. They are living in survival mode. But the comfortable retiree? They do things completely differently. They have built a fortress around their peace of mind. Their number one habit is protecting their liquidity. So how do you fix this? How do you move from the side of anxiety to the side of absolute security? I am going to give you the exact roadmap right now. First, you must create a dedicated health and rainy day emergency fund that is completely separate from your investment portfolio. I want you to look at your actual, real monthly living expenses: the rent, the mortgage, the food, the utilities, the insurance premiums. The old rule used to be 3 to 6 months. But you are in retirement now, or you are right on the doorstep. The rules change. I want you to build an emergency fund of 8 to 12 months of living expenses. A full year is even better. Where do you put that money? You do not put it in the stock market. You do not put it where it can lose value tomorrow. You put it into a high-yield savings account or a cash account that gives you both a competitive interest rate and immediate liquidity. It needs to be safe. It needs to be there the second you need to write a check. But I don't want you to stop there. If you want to be truly secure, if you want to be a comfortable retiree who can look at a stock market crash and smile, you need to implement a cash bridge strategy. This means you should have 2 to 3 years' worth of your basic living expenses, the amount not covered by your guaranteed income like Social Security or a pension, sitting entirely in safe, liquid cash. Think about why this is a game changer. If the stock market goes into a brutal bear market that lasts 2 years, the struggling retiree is panicking because they are watching their retirement account shrink while they are actively pulling money out of it to live. They are locking in those losses forever. But you? With your 2 to 3 year cash cushion, you don't care what the headlines say. You don't care what Wall Street is doing this week. You simply stop touching your retirement accounts. You live off your cash cushion, and you give your stock investments the time they need to naturally recover and rebound. That is how you control your financial destiny. And while you are protecting your cash, you need to protect your income by making smart, patient choices about your Social Security. I know the temptation is there to grab that money the minute you turn 62. You think, let me take it now before it runs out. Do not you dare do that unless you absolutely have no other choice to survive. Every single year you wait to claim Social Security past your full retirement age, up until age 70, your guaranteed monthly benefit increases by a massive 8%. There is nowhere else on earth you can get a guaranteed, risk-free 8% return on your money. If you are healthy, and if you have the savings or a part-time gig to bridge the gap, wait. Maximize that guaranteed paycheck because it is your ultimate protection against outliving your money. You also need to look at the hidden retirement killer that nobody wants to talk about: healthcare. Stop assuming Medicare means free medical care. It does not. Between deductibles, copayments, and the 20% gap in Medicare Part B, an average retired couple needs hundreds of thousands of dollars just to cover healthcare over their lifetime. If you are on Original Medicare, your habit must be to protect yourself with a robust Medigap supplemental policy to cover that 20% you are on the hook for. Do not let a major illness wipe out 40 years of hard work just because you wanted to save a few dollars on a monthly premium. I need you to understand that true financial freedom in retirement is not about being rich. It is about being secure. It is about knowing that no matter what happens to the economy, no matter what happens to interest rates, and no matter what surprise bill lands in your mailbox, you have the liquidity to handle it without changing your lifestyle. Go to your computer. Open up every single one of your statements, your bank accounts, your 401k, your traditional IRAs, your Roth accounts, your debts. Look at the raw numbers. Calculate exactly how many months of cash you have right now if your investment portfolio went to zero tomorrow. If it is less than 8 months, you have work to do. Cut your unnecessary expenses. Rebalance your asset allocation. Build that cash wall around your life. You have worked too hard, for too many years, to let fear run your retirement. Choose control. Choose liquidity. Choose your peace of mind.